Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, we will be reviewing Nigeria's second quarter 2023 capital importation numbers, published last week by the National Bureau of Statistics. Capital importation, which is financing provided by foreign investors, remains important to the economic growth and development of a country as it creates FX liquidity, funds business, and generate employment opportunities. The investors in markets like ours seek to increase their returns and diversify their risks. Capital importation is grouped into three. 1. Foreign direct investment, an investment made by a firm or individual in one country into business interests located in another country. 2. Foreign portfolio investment, purchase of securities and other financial assets by investors from another country. And 3. Other investments, mainly trade credit, loans, and currency deposits. A certificate of capital importation (CCI) is issued within 24 to 48 hours by a Nigerian bank to the foreign investor for an inflow of foreign capital, either in the form of a loan or equity or goods. The primary purpose of the CCI is to guarantee access to official foreign exchange market for repatriation of capital and returns on investment, be it dividend, interest, and capital on divestment. This simply means that if the Central Bank of Nigeria knows that a foreign investor officially brought in money into the country for investment purposes, the CBN would also provide USD for their exit. The total value of capital importation into Nigeria in Q2 2023 settled at $1.03 billion, a 9% quarter-on-quarter decline relative to Q1 2023 and a 32.9% year-on-year decline compared to Q2 2022. Total capital importation stood at $2.2 billion in the first 6 months of 2023. A further breakdown shows that inflow from other investments of $837 million accounted for the bulk, which is 81% of the total capital importation in Q2 2023, the highest since Q4 2021. This translated to a quarter-on-quarter and year-on-year growth of 92% and 32% respectively. Loan accounted for 92% of other investments. Loan are mostly advancement by a foreign parent company to subsidiaries or foreign investment in Nigerian companies in the form of debt. Foreign portfolio investment accounted for a meager 10% of the capital importation in Q2 2023 versus 57.3% in Q1 2023. Total FPI moderated to $107 million in Q2 2023, down by 86% year-on-year from $757 million in Q2 2022, and the lowest since Q4 2020. The decline can be attributed to the lack of clarity in the FX environment and the uncertainty around the general election until the last month of the second quarter. Still on FPI, investment in bonds accounted for 80% of total FPI in Q2 2023. On the other hand, the Nigerian equities market attracted a small 8% or $8.5 million for the quarter under review. This implies that the bull run experienced in the local market was driven by domestic investors and foreign investors with trap funds. Foreign direct investment, which is more long-term in nature, improved quarter-on-quarter by 81%, but down year-on-year by 42% to $86 million. Despite the huge consumer market, Nigeria continually fails to attract FDIs due to its poor business environment and policy inconsistency. Unfortunately, FDI, which is the most productive segment of capital importation, has continued to thin out. By sector, investment in production and manufacturing topped with a proportion of 59% of total capital imported in Q2 2023. This was followed by banking, shares, and financing with 19%, 6.7%, and 6.2% proportions respectively. An assessment of Nigeria's capital importation by source shows that the United States of America took the lead, accounting for 26% or $272 million of total capital importation. This was trailed by Singapore, 17% or $117 million, South Africa, 13% or $137 million, the United Kingdom 13% or $132 million, and the United Arab Emirates 10% or $101 million. By state, Lagos still ranked the highest in Q2 2023 with a significant 70% share of total capital importation, followed by FCT with 19%. This implies that Lagos and Abuja accounted for 94% of total capital importation in Nigeria. By banks, First Bank of Nigeria 31%, Citibank Nigeria Limited 18%, and Rand Merchant Bank 12% all accounted for 62% of total capital importation. Looking forward, we expect capital importation to remain low for the rest of the year given the FX backlogs and instability, unclarity in fiscal policy, and lack of a coherent monetary policy direction at the CBN. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send SMS to 070-8246-3747. Stay blessed.